talking about, you know, all the different ways to grow equitable value. And this week we want to talk another way to grow quick equity, and that's interest rates. Shelly and I were talking in the car after our video shoot of how low the interest rates have dropped. It is crazy.
You hear it on the radio right now that it's like all-time low, blah, blah. And it really is true. They are at a really good rate right now, whether you're doing FHA, conventional, USDA. The rates are absolutely amazing. And Holly and I did a little bit of math for you just so you can kind of have an idea, because sometimes most people are probably like, I don't understand like what the difference between 4.5% or 4.25% versus, you know, under 4%, or what that means to a buyer. And we did some math because it actually ends up being a big difference. It
is, honestly. We did the math based on a $250,000 mortgage, okay? So $250,000 over a 30-year term at 4.25% interest rate, your payment before taxes, insurance, and so forth, it comes out to be $1,230 a month. Today's current interest rates are dropped down to 3.89%. So when you factor that in, the payment goes down to $1,178. Now, while $52 a month doesn't seem like a big deal, Shelly did the math and it came out to like $624 a year. But realistically, the way I look at it, I back into it a little bit, well, Shelly and I both do, we back into it a little bit differently, because monthly, anybody can give up going out to dinner once or twice. But if you look at the big meat and potatoes of it, $52 a year, if you back into that number, $52 a year is $11,000 in more features that you can put in your home. So you could put, you could do that third car garage, you could do a deeper foundation pour.
I mean, that's a huge upgrade that you may normally live without, because, okay, well, I'm just at my max, but by saving that $11,000, like I said, it's a nice upgrade.
It's crazy, because people will come in and they'll tell us, oh, I'm pre-qualified for this dollar amount. And Shelly and I are both quick to just quickly say, hey, that's great, but what do you want your monthly investment to be? And once they tell us what they want their monthly investment to be, we try and back into that number too, because ultimately you can be pre-approved for all the money in the world, but when it comes down to brass tacks, you want your payment to be at a specific budget number, and we want to make you get to that number without going over.
Right.
But honestly,
living on ramen noodles the rest of your life.
Absolutely. Although there's a really good YouTube video on things you can do with ramen. Just kidding, squirrel. So $52 a year, or a month rather, does not seem like a lot, but again, that's $11,000 more you can borrow if you're pre-qualified for a specific dollar amount. So that in itself is huge. So we definitely have the right lenders on hand here at any of our locations. Even if you don't buy a home with us, our lenders are phenomenal.
Absolutely.
They are all our preferred lenders, and we use them because they really go the mile, extra mile for our buyers. They're not just
they've earned their right for us to hand out their business cards. So I mean, we don't just hand out anybody's business cards. These guys have really proved to us that they know what they're talking about. And like Holly said, even if you don't buy from us, we still hope that maybe you would take their advice and you know, at least listen to what our lenders have to say, because they know their stuff.
Absolutely. And they are also incentivizing our buyers.
Absolutely, right? Yeah. That's what we talked about that last week, about our lenders right now are offering the $1,500, and with the incentive that the builder typically runs, we can pretty much cover most of your closing costs. So if you missed that video, go back and watch it, because it was a good one.
That was a really good one. We got a lot of feedback on that.
We did. Well, I think people, you don't realize, like, oh my gosh, USDA, and then that's 100%, and then when you break it down, that, oh my god, you know, between the builder and then the lender, that my closing costs could pretty much be taken care of. So pretty cool stuff.
You bet. I had a VA guy one time thinking he couldn't use his VA loan twice, so he was going to go with an FHA loan, and my preferred lender was like, hey dude, you have a DD-214 sitting here just waiting to be used. And he's like, oh, I already used it. Well, you can use it subsequently because you've actually paid that note off.
Yeah,
and that's going to it's ended up saving him almost $300 a month because he didn't have PMI. I mean, he was in the upper 300s, but even still, you know, definitely reach out to us. If you don't want to use this, that's fine, but our preferred lenders definitely know their business.
Absolutely. But if you want to use us, go ahead.
We definitely recommend that.
Yeah, we do. Definitely recommend.
I recommend Shelly. Shelly recommends me. So you know, whatever.